All right, Candle Range Theory Trader here with another video talking about taking entries off the inverted fair value gap. So what I'm going to do is show you a simple three candle range theory pattern, and then how we can use candle twos iFVGs or inverted fair value gaps. And I'll show you the indicator to use that you could take these. So very simply put, you have options when it comes to taking entries. So I have a three candle range theory setup here. Candle one on Monday, candle two, which creates the high of the week on Tuesday, and today is Wednesday, candle three. All right. So what I can do, I have a couple options. I can, number one, just look for regular fair value gaps. So if I do this and I use, let's go here. And this is the script that I use for indicator that I use for fair value gaps. It's FVG by Nephew Sam. Okay, that one right there. Okay, it should look like this. And I just pop this on the chart and then you can play with the settings. Okay, so let's make that visible right there. Okay, so here we see the bearish fair value gap. See how price retraced into the gap and then rocketed down. It retraced near a gap and then rocketed down. Now, what is an inverted fair value gap? Okay, so what you'll do is if you go to the indicator, go to the settings, and then scroll down to where it says show iFVG right here. Okay, show iFVG, and you click it. What an iFVG is this. Let's do the replay. Hold on, let me hide it. Let me not show it. I'll show you how it transitions. So let me unclick it like that. And then I'm going to do a quick replay like this. Okay. So see right here, this was a green fair value gap, okay, which means that price taps it and then it skyrockets out, all right? When this gap gets broken or closed below, how it's originally set up is that it's just going to disappear. Like if I play this forward a little bit, okay, boom, see how that green gap that was just here disappears? Well, it still can be considered a valid price level. It's just now an inverted fair value gap. So when you click this, what was once green is now red. Okay, it's an inverted fair value gap. Okay, same level. So now what I look for is if I don't get a regular bearish fair value gap for a possible entry, I can use an inverted fair value gap as a price level to take an entry off of. So this is a real trade that I took. So when price retraced up to it, so I retraced and then ran down, right? And then now the chart is live here, okay? But this inverted fair value gap actually held. So you have an option whereby if you miss like the perfect entry up here on this 9 a.m. candle that goes lower, then just use an inverted fair value gap if there are any to see if you can take any entries that way, right? And you just use the indicator to help you out. So let's get rid of all this. And I'll try to find another example here on a finished fair value gap or on a finished candle range theory. So I'm going to get rid of all my indicators. Okay. All right. So now let's try to find one. Let's just go to I'm just going to pick one at random EJ. All right. So here's a candle range theory right here. 1, 2, 3. So I'm going to mark the high and the low real quick. Well, okay, so that's candle 1, the high, and candle 2, well, the high and low there like that. Okay, and then so this is candle 2. So whatever inverted fair value gaps that we can find in candle 2, we could possibly use as a means of entry. Okay, and you set your stop loss just like right below it. So let's select the bar and we'll go right here. We'll drop down to the 5-minute. First, we'll take a look at the regular fair value gaps. So if I go here, and regular fair value gaps are fine. You don't have to use this. You really don't. See how price retraced into this regular fair value gap right here at about 1:10 a.m. and then rocketed up. So you don't need the inverted fair value gaps, but just for the sake of this video, let's see if there were any. So I'm going to go to my settings and I'll just do the inverted fair value gaps. Show those only. Okay, so this was a, let me see, let me go back a little bit. Okay, so we have one right here where this was a bearish fair value gap and then it flipped, right? So then price retraced into it around 2 a.m. and retraced into it again and then skyrocketed up, right? So if you missed the regular, so let's put both of them up on there now. And I hope I'm not confusing you. It's just the indicator will show you. And like I said, you don't need it. Let me move this out of the way. So these are the regular fair value gaps here. Okay, regular bullish fair value gaps here. All right. And then these are the inverted ones here. These were red, but then they flipped green. See how this strong price move went down, but then price came up. So when it closes above it, now it's inverted. So there's still a gap in price. It's just now that your bias is flipped. Okay, and then you can use this as a valid level to see if you can take entries. I hope that makes sense. So let's do one more. Let's see here. We'll do that. And let's go back to the daily. Let's get rid of those. Let's go back a little bit in time. Let's try, we already did a yen. Let's try pound dollar. All right, so looking for a basic candle range theory pattern here on the daily. Here's one. So we got the high here, the low here. All right, so this is candle 3 right here. This is on Wednesday, right? So let's go to replay, go right here. So we're looking at Wednesday's price action, and we're going to see if Tuesday had any inverted fair value gap. So now when I go down to the 5-minute on Wednesday, I'll show you first the regular fair value gaps. Okay, which are right here. Okay, this is Wednesday. All right, so you had regular fair value gaps, yada, 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 retraced into it. Let me get rid of this. Okay, so you got all that. Now, were there any inverted fair value gaps from candle 2? Let's go to our settings and see. All right, and there's one right there, right here. See how price retraced into it at about 6:25 a.m. and then tanked, right? So if you were just trading, so here's the benefit. If you were just trading regular fair value gaps, right, and I'm going to put a box around it because there were two. These were green fair value gaps right here, okay, but they flipped when price closed below it. So now if I go here and then just do a regular fair value gap like that, okay, price kind of touched that bearish one right here. Let me scoot this back some. Okay, it tapped it a little bit, and sometimes they're overlapping. That's fine. So I'm not saying you're going to be a millionaire if you start using inverted fair value gaps. It's just you can use the price level as a means to say, okay, well, if this inverted fair value gaps hold, there could be a trading opportunity here, right? So yeah, price did retrace here, so you didn't necessarily need it. But at the same time, if you want to just flip it and see, okay, well, are there any inverted fair value gaps that can show me an entry? The main thing is that don't just click the button randomly. You need a plan. So if it's not a regular bearish fair value gap, if you're short, then you want to look for your entries off of inverted fair value gaps. So we'll switch it. And then you just look for this price level. And actually, this one to me was a little bit of a better one because you know that either way, once it hits the gap, it's supposed to run away if it's a true candle 3. It taps it and then displaces out. It taps it and then runs away. It taps it and then runs away. It did again right here. This is another inverted fair value gap right here. So you can use these to try to get laser entries if you don't get a regular fair value gap. Because what's going on is that these look like buys. But remember what I told you is gaps. If a gap gets closed out, that's a bad sign. If you're long here, and I'm hoping not, this will be my last point, and then I'll shut up. there were people who thought that this was the low of the day right there. And let me do the regular fair value gap here and here. Okay, there were people who looked at this and thought this was a basic double bottom or a W pattern, and they were going long here off of this fair value gap. But us, because and you see how it just got closed out automatically, right? So anybody who went long there was toast. Okay, so that is what we're looking at. All right, and then if we keep going, see how I created more bullish fair value gaps, but we know now that we are using inversions, we're counting on this price level right here. So you can just quite simply put your short, I do like right above the daily open or so, something like that. And let's just say we just shoot for like a 1 to 2, whatever, 1 to 2.5. It really doesn't matter. All right, and then we just let it play out. Okay, and obviously we have the benefit of hindsight, so we know it might work. I don't know if it's going to go all the way down there or not. But the point is that now you have a laser entry now showing you that what they thought was bullish momentum is actually bearish because of the inverted fair value gap. Okay, so that I like fair value gaps. I wasn't a fan of them at first. I am a recent convert because they weren't as reliable as I thought they should be. However, they are good at showing just basic price levels that can show you a possible entry. Will all of them work? No, I'm not saying that. Okay, there are no guarantees in trading. It's just that they can help, and that's the main thing. You want price. You want to be patient. Wait for price to hit a level of interest, and then if you're wrong, you're wrong for a small loss. But if you're right for a pretty big win. Okay, but these are just the stop loss is already built in. Be you using a regular fair value gap or an inverted one, either way. So you just place it there. You can go right above that swing high. It's like a 12 pip stop loss, and it's all there for you. So use that indicator to help you find inverted fair value gaps to look for continuations. Look out for that. I appreciate your time and attention. Thanks so much for watching, and have a great rest of your day, and take care.